Good morning, everyone. Welcome to the modern market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some or ideally a lot of money on the internet. Loaded up discussion today. We have crypto tumbling again. The Bitcoin dips below 100K with $2 billion of liquidations across the market. We've got Strategy offering STRE, the first ever euro denominated perpetual preferred stock to European and global institutional investors. We'll talk about that in a bit too. And finally, we've got Hyperliquid pre-markets for Monad and MegaETH wicking up violently with the shorts getting liquidated. We've also got the latest on price action on crypto and NFTs as usual, and a general market discussion on all things. So stay tuned for that. I've got Legendary in the co-host seat with me today, and we are ready to get into it. But just a reminder, friends, before we do, nothing that we say here is financial advice. This market is very, very risky, and we do not know anything for sure. So please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Wednesday. It is the 5th of November. How are you doing? How are you feeling?
GM, doing quite well. I am on a mission today, and this mission is called flooding people out of their mega ETH deposits, because people can withdraw, and I'm trying to be a bit diabolical on the timeline and get people to withdraw so that my own allocation, which we will learn about tomorrow, they did delay it by 1 day, that I can increase my own allocation by flooding other people out of that. You know, it's a tough market. You might want your stablecoins back. You feel more secure in a stable back. You might want to buy the dip. There's many good reasons to withdraw that allocation and get your money back. Absolutely no selfish interest from me by saying that.
I don't think it's going to work. I don't think it's going to work, especially not on the day when the pre-market prices wicked up quite a lot. So I don't know for what reason people would be withdrawing their allocations right here, right now.
Pre-market, this is high up. Don't believe the pre-market. You know, be safe, withdraw instead.
Yeah, I think it's one of those cases where you don't listen to what people say, listen to what people do, or watch what people do. Don't listen to what people say, watch what people do. That's the follow the money in all cases. Interesting strategy. How are things otherwise? What's so today is I think it's either later today, at some point later today, right? Where we find out the Mega ETH allocation. So that is pretty exciting.
It is tomorrow. As I said, they did delay that by 1 day. Today, they will only explain the methodology, and tomorrow will be the day when the allocations will be revealed.
Okay. So that's pretty exciting. So we've got that to look forward to tomorrow, I guess. And what else? What else? How are you feeling, Ledger, after, big sell-off yesterday? It was kind of relentless, continued post-show. We got, we're going to be talking about this more today, but Bitcoin at 101, ETH at 3.3, Sol going as low as 160, fear and greed, touching, under go or hitting 20 for the first time in a long time. It's kind of the red zone, I think. So how are you feeling in general with the market in that state?
I don't mind that. Like, yes, we're getting closer to extreme fear. And I said on the title as well, once we hit extreme fear with a bit more significance, a bit stronger, then there might be a good point in time to buy some of the dip. And some dip buying has been done by whales, especially when it comes to ETH. We'll get into that later in the show. So I'm not too worried about that. But the main reason is also that I am very comfy in stables for a good part of my portfolio. I did say that my allo was around 55-ish% just in crypto. It did increase that as a result of the fact that I wanted to full send the Mega ETH presale, and I did not want to touch my stable reserves for that. So I basically closed as many positions as I needed to get the money together to full send the presale on the one hand, and on the other hand, I obviously also have cash in the bank. So overall, if you look at my total portfolio, I'd say 2/3 of that is in either stable coins or euro or USD. So I'm not too worried. The only thing is, it's kind of boring. It feels like there's nothing to do. There's no buttons to click, and I do love to click the buttons. So it's more like, what will the next thing be that allows me to click buttons? And that probably is going to be Mega ETH mainnet. Yeah, but I'm not worried. I'm only bored that there's nothing to be done at the moment that requires intense button clicking.
I think it's just another reiteration of how our behavior or how our sentiment and feeling front runs the price. Like when we get bored, this is just a great function of being in the market every day and being actual participants. When we get bored and start playing golf or going to the gym and doing other things. And now, by the way, I'm going to be going to the gym every day anyway, because that's like part of my routine. It's not going to change. So that will no longer be an indicator. But when I have more time and more leisure time, it means that the market is about to either chill or go down. That's my learning from my own assessment of my own behavior and how markets respond, because we're so plugged in. And it's just one of the excellent functions of doing the work every single day. And then on the flip side, you get these moments where I'm scrambling around. I've got too much news for the snapshot every day that I've been writing for, I don't know, 3-4 years now. We can't fit all the news in. We don't know how to allocate all our stables because there's so many high quality uh, protocols that you want to allocate to. And that's when you know like something good is either getting cooked up or is in the process of happening or is happening as you speak. And yeah, I think it's another learning that trusting the intuition and the personal behaviors as you observe yourself is super, super helpful. I think. Do you have any other reflections on that, Ledge?
Yeah, I like the indicator that I like a lot more than just reflecting my own personal behavior, because that might be wrong at some point in time when there would be something to do and I missed that because I'm like stuck in my longevity or gym routine. But the indicator, which I really like, which you mentioned, is the snapshot, and just seeing, are we talking serious news even from the Web3 roundup? Is there a lot to go through, or is it the seventh day in a row where the only headline is that either price is up or down and Trump did post something which we need to discuss? Or is there like so many meaningful things happening that we then end up um, running over time? And that's also something that I like looking at. Like, are we running over time? Or do we manage to like get everything done within 60 minutes? And then the other indicator that I like is um, audience sentiment. And we have the comments, and they are playful, they are serious. But the last couple of weeks, it was kind of apparent that there's been quite a few people who are like, guys, please, for once, can you be bullish for one episode, bearish all the time? And that is kind of telling as well. That is like kind of saying, even if it's half joking, half serious, doesn't matter. But it's kind of saying, okay, we would like to have another leg. We would have to have
Yeah.
an extension. We would have like
Yes. Yes.
another opportunity to sell, to take profits. And if that reaches a certain frequency, I'm like, okay, maybe this feels a bit ripe for a correction in the market.
You know that chart. What's it called? The one where you have, I don't know if it has a name, but the one where it's like
Yeah, I know
uh,
what you mean. Let me get it up. Like the what stage of the market
the what stage of
yeah.
the market that we're in chart. There's literally is there one called is there one leg of that called desperation?
Oh yeah, of course there's. Yeah.
Because or it's denial, desperation and denial. And if I had to uh where are we here? So let's get this one up on screen, maybe Cash, that Legendary is sharing at the moment, the 4 stages of the market cycle. Oh no, so no, there's not desperation, complacency. That's where if I had to play something where we were when we were getting those kind of commentary around really wanting us to be bullish or wanting one more leg up, like can we please just get one more, can we please just get one more? And you know that the only reason anyone wants one more is to be able to sell at that one leg higher, which I think is maybe indicative of not people having not capitulated yet. And there could be either there have been 4 sellers in the last week or so, and maybe more to come. Frankly, like I think if Bitcoin goes to, gosh, let's just role play that situation for a bit. If Bitcoin goes to, if it goes back under 90, pushing towards the low 90s, just think of the carnage there'll be in the rest of the market. And then I think at that point, if we go in that direction, that's when the buying starts to look far more attractive for me. Like just being at 100 is not a big deal. I don't think we've been at 100 for a while. And it's not that scary, I don't think, here. Um, and I also don't think it's like, okay, it's not a screaming buy. If you've been buying some here before, of course, if you take a long-term perspective, maybe. But on the medium-term view, which is what we kind of like to do, we've had so many opportunities to buy at like 106 or 102 or 108 or 110. Like it doesn't make a huge difference to me, I don't think. So those are my reflections. Ledge, any final ones from you before we get into the main stuff today?
Yeah, I like that. I mean, 100K Bitcoin is still significantly still like 50-ish% above the previous all-time high. So that is not like massive denial panic stage in the market. I agree with you.
Okay. Good stuff. Right. Let's get into the main price action as usual to get you up to speed with everything that you need to know. So starting with Bitcoin, we are down a couple of percent to 102K. We did dip down as far as 99K yesterday. ETH is down 5% to 3.3K as well. We've got XRP down a couple of percent to $2.20. Got BNB flat around $945. Sol's down a couple of percent too to 157. We have Hyperliquid showing huge strength here, up 9% to $41. One of the main coins that is up significantly. Some very, very big buyers were stepping in yesterday with millions of dollars to support the hype price, thinking that that was too cheap and a dip to buy. So that is interesting to see. And then finally, where's Sui gone? Sui's flat at around $2. So hype versus Sui recently, Sui's definitely got hammered in that competition, I think. Getting into the meme coin side of things, we've got Doge down 1% to 16 cents. Pepe is down 1% as well. A bit less volatility here, really. Bonk is up 1%. Pengu's flat. SPX is actually up 4%. So just no more volatility on the meme coin side of things versus the rest of the market. If anything, Fartcoin's up a couple of percent. Rect is down 12%. That's got hit pretty bad, but I did see, I think Rect did a big buyback, company buyback of that token. So that's what's going on in terms of the price action itself. Getting into the headlines themselves and what we're going to talk about today. We will, of course, get into the first set of headlines, which is around the price. Bitcoin's dipping below 100K, $2 billion of liquidations across the market. We'll also talk strategy, offering STRE, the first ever euro-denominated perpetual preferred stock to European and global institutional investors. And we'll talk Hyperliquid pre-markets for Monad and MegaETH, which wicked up violently as shorts got liquidated. We'll got to consider these pre-markets on the Hyperps, which have received a lot of criticism, not just today, but also before, about almost being unusable and untradeable. So we'll touch on that and consider if that's worth the risk or not. As a notable price action, got Momentum Finance launching and settling at around a 1.2 bill FDV. That is, it went as high as 4 bill yesterday. So a pretty successful launch there. It's one of the biggest dexes on Sui. Got Asta up 13% to $1.03. Zcash is down 8% to $438. Hype, as I said, big mover, up almost 10% to above $40 again. Open interest on Jelly. I don't know if you saw this crazy action taking place yesterday. It was larger than the open interest was larger than its FDV as it short squeezed up yesterday. So that was some pretty significant activity. On the NFT side, things are actually just bouncing a touch. Pudgy Penguins are up a couple of percent. Bored Apes up a few percent. Both still under 6 ETH at the moment. Moonbird's the big mover, though, up 27%, back to a 2.1 ETH floor. I think I saw Spencer, the founder, tweet that he's probably got some update coming later in the week. Another notable move, Infinix patrons up almost 10% to a 1.4 ETH floor as well. Getting into the rest of the roundup to get you up to speed with everything you need to know. Berachain actually restarted their chain after the $12 million of exploited balancer funds were returned safely. Monad teased their mainnet launch date with a tweet, although it was just a tease, no confirmation. ZK Sync announced utility plan for the ZK token, shifting focus from only governance. FTX founder SBF has appealed his 25-year prison sentence, so I guess we'll monitor that situation. Gemini is preparing to launch a prediction market, according to Bloomberg. I think a lot of people will want to get involved in the prediction market game, although I don't hold a huge amount of hope for like the new entrants now that Kalshi and Polymarket have pushed themselves so far ahead in terms of being trusted with that stuff. Nasdaq listed Bitcoin mining company Canaan raised $72 million. Pudgy Penguins partners with Virtuals to help create Pudgy imaginations directly on X. That's kind of cool. And then finally, Pump Fund has added on-ramps with Revolut, Venmo, Google Pay, and PayPal. They say to increase possibilities of funding. But when I read it, I thought, wow, making it very easy for everyone to lose money faster. But I guess that is part of their product. So, if you want to speculate, you now have the ability to do that much faster with funds from wherever you have them. So that is the roundup to get you up to speed with everything that you need to know, Legendary. Before we get to the main headlines today, what is catching your attention, either from there or elsewhere?
Yeah, two things I want to comment on. The first of which is the Zcash price. That has been up so significantly since you posted a snapshot that we are now actually up on the day. We're up 12% on the day and at $460, even outperforming hype on the day. And
Crazy.
the second thing I wanted to comment on and take it maybe a bit in a different direction is the Gemini is preparing to launch a prediction market, according to Bloomberg. Piece of news in the Web3 roundup. So what I would like to see in the future, and what we hopefully will see at some point, is this. We have Apple using OpenAI using ChatGPT for Siri, for the voice assistant at the moment. There's also been reports coming out yesterday and the day before that Apple is considering to either move to Anthropic or to Gemini, and apparently Anthropic would cost Apple like 1.5 bill a year to use their services. Gemini is making the more competitive offer to power Siri in the future. And I would love to live in a world where I can, say, talk to Siri. I'm not going to say the hey thing before because otherwise it's going to trigger my iPhone, which is next to me. And just tell Siri to, place a bet on a prediction market and have a wallet integration natively in my phone as well, and have the best user experience, but not needing to go to a website, not needing to connect the wallet, just voice command telling Siri to place a bet on a specific prediction market if there is one, and do that very, very seamlessly. And I think we will get to this point. I don't know, maybe in a year, maybe in a couple of years, don't know how long this is going to take, but that is a future that I'd be looking forward to. Side note and side thought on that, it is wild to me that Apple is relying on different LLMs. They're like, oh, do we use Anthropic? Do we use OpenAI? Do we use Gemini? That they don't have their own model, which maybe they're developing. It's going to take them longer, but that for something so crucial, they're relying on a third party to be integrated with them.
Yeah, I think I've been kind of bearish Apple for a while. I think you were maybe more positive. I don't think that half of their stuff works anymore. Like I just don't think the integrations work like they're supposed to. You get hit when what was I doing? Like Apple Podcasts, trying to integrate it with something else. It's just like I keep getting hit over the head with various things that don't work. The main point of Apple is that it's supposed to work better than everything. It's supposed to look nice, whatever, but it's also supposed to work and function seamlessly all the time. I think there's loads of aspects of it that don't work, and they're not really doing anything new. They're not really, I've thought that for a while. The main thing for me though is just when stuff doesn't work, I get infuriated. So I sold my Apple stock a while ago. Not that I had a huge amount. It's not a huge allocation for me. Just a quick side note on the AI stuff then. I think Google's price was up hugely. Maybe not only for the reason that you just described, but also As maybe people are questioning this kind of AI dominance that ChatGPT will have an open AI. So is that something that you're considering, something you've been thinking about? Google coming kind of riding in to steal the show here.
Yeah, we've seen Alphabet pumping a lot on the news that when they had the quarterly earnings, it was the first quarter where they had more than 100 bill in profit. That did send the stock. It's up 13% on the month. Admittedly, it's down 2% on the day, but so is the S&P 500, which was down 1% yesterday, still trading at $278. I do think about that quite a lot because I think this is not only from a stock and equity perspective, but also from a societal perspective, the most important battle of our generation of in humankind, even to see who is gonna have the hegemony when it comes to AI, who's gonna be the dominant player, who's gonna be the first one to have an AGI model. So something I do think about a lot, albeit I cannot influence that at all, right? It's one of these things where you know it's going to change society completely, but there's nothing you can do about it, and there's no way you can predict anything that's going to happen in that. So, moving back to what it means for my investment strategy when it comes to AI, for that reason, I do spray a bit of paint on the wall, diversify quite a fair bit, and see what stick eventually.
Yeah. Okay. So taking that final point, I want to ask a couple of questions. A, are equities too high here? Something I would love to build a position in is Meta. I kind of like all of these things, but I really think the phone is cooked. I think smartphones are cooked. The future form, I I I would I think we'll go towards glasses at some point, but the phone clearly has nothing more to give. There's no more iterations of the phone. People try to do a double phone, fold the phone in half. Like no one cares. The phone is cooked. There has to be a different form, and I think Meta are going to be super well positioned for that. But the question is, everything's so damn expensive. So uh, maybe a few questions rolled into one. A, are equities too high? What are you doing about gold these days? And then I want to ask a question on Zcash.
Okay, gold. What am I doing about gold? So I did have two gold positions: the in real life position, which is a long term hold, and then I had the on chain position, which was a result of the fact that gold had depegged. So I was able to acquire it for 10% cheaper back on October 10th. That on chain position is long gone and was rotated into BTC and then into stables. The real life gold hold, I continue to hold that. I'm not buying at the moment. It's already a good or a relevant size compared to the overall portfolio. It is a couple of percent. But at the moment, I'm not really adding to that. And then in terms of the stock market, the second part of the question was if I think that equities in terms of the valuations are too high in terms of the market cap, or where did you want to go with that?
Is it just too high to be accumulating here now? In the same way that we said, okay, Bitcoin at 110, 120, you feel reluctant to be accumulating Bitcoin up there, right? Like you would much rather do it from a lower point. And the question is the market going to give it to you or not? Equities just seem to want to stick high and are not getting the correction that I'm sure everyone is craving. So what's your perspective then?
It's a good question. There's like a battle that's going on inside of me. Like on the one hand, I'm like, oh, if you look at the PE multiples, they are absurd. Like tech stock, looking at traditional indicators, seems so overvalued. But then the other part of me is saying these multiples just don't matter anymore. And numbers don't really matter anymore that much. What I mean by that is Nvidia is trading at it's trading at 4.8 trill, did hit 5 trill. Elon Musk's compensation plan, which we had discussed on the show, which would pay him 1 trillion, 1,000 billion, but that is under the assumption that um, Tesla hits a total market cap of 8.5 trill, which I think would be a 500,000% gain from its initial IPO price. So 50,000x on that. And these numbers get so absurd. And maybe the leading number for that is the US government debt, where he said, yeah, like billions and billions of debt a day, 600 um, just over the last month. And I think someone made this statistic where he said, like, if you took the entire net worth of all American billionaires and you use that to try to pay off government debt, the US would have reacquired all that debt within the next 6 months again at the current rate. So numbers are getting sort of proportion, and that I think that to a certain extent they don't really matter anymore. And obviously, the counterpoint to that would be, if this AI bubble is to burst, and it will burst at some point, then obviously, if numbers have gone up so highly, they can come crashing down pretty aggressively as well. Then again, I'm thinking, and this is the third perspective coming in, which I said before, like there is obviously this very realistic chance that we're going to see AGI models coming out not only within our lifetime, but within the next couple of years, maybe the next decade. And then I really think that these numbers, that's like 4, 3 trillion, whatever, don't matter anymore, because this is going to be such a dominant and strong position and such an impactful change to the entire economic and societal structure that we could go so much higher from here. So, to sum it up, yes, numbers are high. Yes, there's a risk that the bubble is bursting, but I think that I still, sorry, I still like the like risk return ratio and profile at the moment for some of these stocks that might seem overvalued if you look at traditional metrics.
Okay. Yeah, I think, I don't know. It seems very, very high to me. The thing that I am currently overlaying, I know I've spoken a bit on the show, but I'm just overlaying this against the political cycle and thinking that Trump's only been in for 1 year right now. And I don't think, well, let's phrase it like this. I think it is less likely than that he can make it go up for 4 years in a straight line than it is likely that there are some dips, but he ultimately makes it go higher in general. So the point being, yes, I think he will make it go higher over the longer time frame, but 4 years is a long time, and 1 year has been a long time. And I just think we have to cool at some point for a little bit, and I just think we're very impatient, as I was discussing to a large extent on the show yesterday. So, want to bring Funky in here because his hand is raised, and then we'll get into the main headlines for discussion today. Welcome to the stage, Funky. What are your thoughts here on whether it's equities being overvalued or general market thoughts? What did you want to contribute?
GM boys, what if this is the cool down?
Yes, it very well could be.
Could literally be the cool down, because again, things that I've already brought up, just the pent up liquidity, all these other things, and historically, just Republicans tend to, over the long term, and I have to look and get the exact number because there's been very few administrations that have come in and the stock market hasn't done well. Very few across all of history. Because they're
Sure.
so pro cutting regulations, taxes, what have you. They do. So I agree with you. I think that we'd have some. It's not going to be a straight line up and to the right, but I think overall in his 4-year tenure, I wouldn't be surprised to see, especially if Besant and everybody else is going to be so hell bent on keeping the economy running hot and just playing, some prestidigitation games. Like, look at, sleight of hand, look at my hand over here. Don't pay attention to what we're doing with all the money. And as long as the numbers work out, they'll just keep pumping it, I think. And, this is just maybe one of those cool down periods that we're experiencing.
Yes, I think that it could very well be the case. And as you mentioned yesterday, Funky, something to people to continue to educate themselves on is the government shutdown. And I'm very persuaded that the market will be less comfortable moving forward until that uncertainty is removed. Markets do not like uncertainty, and that seems to be, just continuing rolling over for a little bit longer than the market would like. I think sometimes these things people just assume it every single time. Oh, it'll be fine. It'll be fine. It'll be fine. And yeah, I think it will be fine at some point in time. But the longer it's not fine, I guess maybe people start to get more scared. And actually, I think what you'd probably want to do is go in the other direction. Think of a few things on the timeline by which point you think, okay, they definitely will have sorted it out by then. And then actually, the longer it goes on, the better and more attractive the assets look, because you start betting more on the fact that they're going to resolve it rather than not knowing when they're going to resolve it by. So kind of just thinking about through these things probabilistically in some way. Okay, interesting stuff. Let's get into the main headlines today then. We've got 25 or so minutes left in the show. We're going to talk crypto tumbling again. Bitcoin dipped as low as 99K or 98K yesterday, something like that, with billions of dollars liquidations across the market. We'll also talk strategy and their new European offering. And then we'll talk Hyperliquid pre-markets for the next two big launches, and see what we think on the much criticized activity actually over there. So we'll talk those three things. Let's get into the market stuff first, though. What do we need to know?
Absolutely. Let's take a look at the liquidation heat map, which I'm sharing on screen, where again, the heat map is green. Green is not good. Green means longs getting liquidated. And yesterday we did see around 1.7 bill in longs in total being liquidated. There of 1.3 bill in longs with ETH over the last 24 hours, and BTC leading the chart. So 575 mil in ETH longs, 486 mil in BTC longs have been liquidated yesterday. Staying on the topic of liquidations and money flows, we've also seen yesterday a very, very red day for the BTC ETFs, where the total of 566 mil in outflows. And there was an interesting article which tried to look a bit at what is happening and mentioned that a couple interesting data points in here. So on the one hand, Marcus Thielen, head of 10x Research, said that long-term Bitcoin holders have sold approximately 400,000 Bitcoin over the past month. That is equivalent of an outflow of 45 bill, which caused a bit of this imbalance in supply and demand. Obviously, also touching on the liquidations which we've seen yesterday. On the option trading side, you do have some people executing put option contracts with a target price of 80K. So thinking that there could be an even bigger decline. On the opposite side of that, Look on Chain did report that despite this recent drop for ETH now, not for BTC, many whales have been buying the dip, accumulating a total of 323,523 ETH. That is 1.12 billion over the past 2 days. And that included a whale who borrowed 66,000 ETH from Aave to sell 2 weeks ago. That included a couple fresh wallets, which added 8-figure positions worth of ETH, and a whale who loves swing trading ETH through OTC deals. So that was interesting for me to point out that on the ETH side, we do see some significant accumulation. And we also did see a fair bit of recovery for ETH going from 3K to 3.35, where it's trading at the moment. Just to complete the picture and to also take a look at equities, did mention it earlier on the show, S&P 500 is down 1.17% on the day. What is up again, and holding strong, is the Dixie, the dollar index.
Glad you brought this up.
Benchmarked against a basket of other currencies, and that is up 0.7% over the last 5 days. That is up 2.28% over the last month. And I'm going to say this again, the Dixie typically does not move that strongly, that does not move that aggressively. Just zooming out over the last 5 years, the Dixie's up 8%, and put that in perspective over the last month, it's up 2.3%. So basically over the last month, it did a quarter of what it typically would do within 5 years. It did what it would typically do within a move that you would expect to see within a year or so happened within a month on the Dixie. So the dollar is showing some excellent strength over the last month.
Bear in mind, I mean, the only thing we'd add in there for context is that it's still down 7% year to date.
That is true.
So a couple of percent up, which is, maybe a relatively big move. That's against the backdrop of a really, really big move down over the last year, as the dollar's kind of weakened. I do think that's really interesting though, because we spoke a lot about the dollar decline earlier in the year, and that's part of the reason why I think we were diversifying into some other things, namely gold, back then. Or I think you specifically bought gold very early. Maybe me a little bit later. But it looks like, dollar's pushing up, and maybe at least one of the reasons is, actually, I don't know all of the reasons, but I've been just reading some more European stories have been coming across my timeline the last few weeks and stuff. And gosh, I think the situation in the UK, for example, is incredibly bleak. I've been seeing some stuff about what's going on in France and how they're really kind of reaching, or maybe potentially attempting to reach further into by creating various mechanisms to try to claw back more capital from their wealthiest people. And the UK maybe potentially exploring similar options. And maybe it just means those other currencies are not as attractive, and ultimately the dollar is still fine. So I don't know. All of these currencies are not particularly healthy with the debt situations, but it would be actually interesting to check back. We should check back in on tariffs, Legendary. I don't know if you've looked into that again recently, but the money's really rolling in from what I understand. Like, the money's really rolling in. The court case, I believe, is still open though, as to whether the stuff is legal or not. And if it wasn't legal, maybe there would be an argument to say this stuff needs to get redistributed back to the people it was taken from. So I guess it's just we've got to continue to monitor. I think from that perspective. But any reflections on the rest of that before we move on to the next one?
Yeah, quite some, because it is an unusual move for the dollar. So typically, when the Fed is cutting rates, you would expect that dollar slide to continue. It is also what analysts have been saying on Wall Street, Deutsche Bank, etc. But that did not happen. And initially, the thinking was this year, as you said, tariffs kind of harmed the quote unquote brand image of the dollar. It did also cause this massive decline, which we've seen at the start of the year, but now we're seeing this comeback, which is typically not something you would expect, and it's probably even more impressive that it happens amidst this very long government shutdown. And one analyst put it in a very nice way. He just said it's the cleanest shirt in the dirty laundry. It's not that the dollar is so good, it's just that the other options are even more horrible. And this is kind of which is leading this recovery, because you have weak data out of Europe. You even have a 4-month high if you look at the dollar against the Swiss franc, because that currency is also not doing too great. So it's maybe not so much of a comeback story for the dollar, rather than just looking at the lesser evil. And in this case, it seems to be the dollar which is rebounding on that alone.
Okay. Interesting stuff. Very interesting. We'll keep abreast of those things as usual. Let's move into the next headline today, which is around Strategy, who are coming to market with a new offering specifically for European investors this time. So what is Seda up to here, Legendary? What do we need to know? Is it going to propel Bitcoin to the next stage?
Yes, let's take a look at that. I don't know if it's going to propel Bitcoin to the next stage, but what I can do is break down the offering. It's called Stream, and let's get that press release up as well. What it is the strategy plans to issue 3.5 million shares of a Series A perpetual Stream preferred stock. face value being $100 for that. It does pay, it's one of the dividend paying, once again, it does pay cumulative dividends at a fixed rate of 10% per year on the 100 euro stated amount when and if declared. If dividend is not paid, this is one where compounded dividends will accrue on the unpaid amount, starting at 10% plus 100 bips, so plus an extra percent, and increasing by 100 bips per quarter up to a maximum of 18% per year. As you said, it's euro denominated. It's the first one to be euro denominated, and it is targeting qualified / professional investors in the European Economic Area as well as in the UK.
Fair enough. I think ultimately the amount that it's targeting, though, is not hugely significant. I think it is a reasonable amount. In fact, I actually saw Udi write a post on this. I'll just have a look for it so I can read it, Ledge, but maybe you can bring it up on the screen at the same time. His commentary on this was interesting. I think so. I guess potentially it's a sizable amount. I'm just finding it. So here we go. He said, this was 21 hours ago. He wrote this post. I think people are sleeping on this because CT isn't paying attention as usual. Saylor is about to run another IPO for a new instrument, this time raising 350 million euros, which is 450 million USD, which would translate into $400 million in Bitcoin buying pressure, roughly 10 times what they've been buying recently in an average week. That's without taking into account the IPO size could be increased. That has happened before. And if it does well in the European markets, I could see them issuing more euro instruments. So I think, a pretty sizable amount. One point I would probably make to this is, whilst that is 10x higher what they've been buying recently in average weeks, what they've been buying recently in average weeks is significantly down on what they were buying before. So it does feel like they're looking to up this in general. And also, I'm just, we've been speaking about DATs and thinking that strategy is different to all the others. Now, most of them, I believe, are trading underneath their MNAV. I'm also not entirely sure on this 10% dividend thing. We know for sure in this industry, the question you need to ask when you're talking about returns is, where are they coming from? And whilst I'm not suggesting we need to break down it all specifically, if you haven't looked into that exactly, but does that number give you any concern? Like 10%, double digit return doesn't sound like the kind of thing I would want to be entering into without serious thought, So what's your view there?
I think the wording is one that allows for a lot of liberty. It says regular dividends on the perpetual Stripe preferred stock will be payable. Oh, sorry, this is the wrong one. Let me get the write up. Where was this? Because for Stripe, this is the one that I looked at. They used specifically the wording back then of saying will be payable when, as, and if declared by the board. So basically just giving themselves this option. What I wanted to double check is if they used the same wording for Stream as well. And they did say declared regular dividends on the Stream stock will be solely in cash. So if, again, they don't declare them and the dividend that they don't pay them and the interest goes up to the full 18%, and then they still don't pay them, I don't know what happens in this case. I would not think, based on the wording, that it would have any meaningful consequences or that is a legal obligation, but that is just me doing an ad hoc thinking on that, and definitely no legal or financial analysis of that.
Yeah, I mean, I think when you announce these things, you got to pay out. You're going to have to pay out the thing, which that's what you put on the ticket. That's what the investors will want, and if you don't give it to them, then you're going to pull the funds at some point in whatever capacity they're allowed to. So, I don't know. The number seems uncomfortable for me. But as you say, these are complicated instruments, and I think we need to do some more reading on them to understand them more. But worth looking into, because strategy for all of the DATs is the leader. Like if strategy in some capacity breaks down or doesn't work, then it's not looking good for the rest, and it's already not looking good for the rest, frankly, as we've been speaking about before anyway. So we'll keep an eye out. Definitely important to keep on top of that. So that's the news on that. The final headline for today, as we draw towards the end of the show, got in maybe the last 10 minutes, is to discuss the Hyperliquid pre-markets for Monad and MegaETH, which wicked up violently yesterday. A lot of shorts got liquidated. That was because these pre-markets are just not very safe. So just taking you through what happened, roughly speaking, we've got the Monad chart up here. I believe that wicked up as high. So Monad's up 40% at 5.7 bill now, but you can see a wick up. I think this went as high as 11 bill, even just for a moment yesterday, and that's coming from a price where Monad was as low as maybe 3.9 yesterday, 4-ish. So it went from 4 all the way to 11 or 12 bill, and then all the way back down to now, which is like 5.7 or something. So still up 40% on the 24 hours, which is a huge move, but an even more colossal move on that one wick, which clearly liquidated a lot of people who were short. On the MegaETH side, what we saw was not anything as violent, although it was still pretty significant. I think looking at Mega was trading at around, let's see, if Mega was trading at around 3 bill yesterday, something in that region, wicked up above 5 bill yesterday, and now has come back to settle at around 3.7 in that region. So again, up 20% on the day, so a big move up, but a way bigger move as part of this move up. And I guess what the discussions around this have been is that is this a valuable market to have? Like, is this a reliable market to have? Is this a valuable market to have? The two questions that strike me are A, is this a useful market to participate in? And I'll give out my thoughts on that in a bit. And then second, is this even effective price discovery? Are we really getting a price that people want to pay for any of these tokens, or is it just manipulated entirely? And then actually, when it comes to the token trading in the live markets, do we end up just having a starting point that is completely out of touch with reality because it's been manipulated in various forms, and then you end up, the teams that end up launching, or the market ends up launching at a price it may not have done before? So those are two questions I've been thinking on. We'll have some thoughts on it, but to get some commentary from the rest of the market, Geordie Alexander, who is the founder of Selene Capital, had this to say. He said, "The worst thing about Hyperliquid is the ongoing listing of Hyperps. I've explained to Jeff at length about why this is simply a broken design, and the market has proven it time and time again. The price always dislocates upward from centralized exchange pre-markers and is just a digital honey trap for retail. Yet they keep listing them without a fix. It's a slap in the face for any one of us who cares about market structure. I love the ambition of going after housing all of finance, which is great. The Hyperps aren't it, though. Time to look at facts and not theoretical formulas. Fix it or stop them." So pretty strong words there from that perspective. And a final take from Hasu on the timeline was this: said, "As with all unregulated financial products, Hyperliquid has to walk a delicate balance here between offering what the market wants," which is the market clearly wants to gamble on this illiquid stuff, and doing it in a responsible way, which doesn't lead users to get wrecked. So I would agree that we are currently more in the second world, where people are just getting wrecked, and less in the first, which is meeting valuable market demand, as indicated by the all too frequent blowups and fairly low open interest and volume numbers. So, the blowups are coming become more likely to be less liquid to the market is so what was this final point? Doesn't matter. The final point doesn't matter. But I guess the overall take here is that these markets are not doing well. They are serving a demand, which is for people to speculate on the pre-market, but they are not doing that in an efficient way. They're not doing that in a safe way for market participants who are basically getting wrecked on both sides. Ledge, we had said for a while as well that after playing around a little bit on the XPL one and watching some of that activity, remember the same things happened on the XPL chart. I kind of said, I can't touch these. Like you're basically not allowed to short. You're too scared to short. You think the price is going to go down, but you can just get completely blown out of the water by one of these crazy wicks. So it feels very dangerous to play with. What's your perspective here on the hyperps?
Multiple thoughts on that. Yes, they're super volatile. Yes, I think they still are a good way to get a sense, and it's the best way actually that we have to get a sense and feeling of where a token will open, because despite all of that wicks and volatility, the opening point was fairly accurate, way more accurate than the stuff that we've seen with Whales Market. Sometimes where you had like 10K in volume and something got filled to 20 bill and people were like, oh my God, I'm making gajillions based on this alone. And no, they're not a way to hedge your airdrop investment or whatever. They're way too volatile for that. So you can use them as a speculative tool, but not as a hedge. With all of that being said, I find Jordi Alexander's like take and Jordi going so strongly against the perps very weird, especially if you go down to the comments, someone making a suggestion to do 20% circuit breaker for all coins on hyperps, and that he is advocating for breakers, hard limits, open interest caps. So just to maybe clarify on that, a circuit breaker is, for example, something that we have for the S&P 500. If the S&P 500 sees a ton of volatility, it comes to trading halt. So 7% drop means the market gets halted for 15 minutes. 13% drop, another 15 minutes, and a 20% drop causes an entire halt for causes a halt for the entire trading day. This is what is a circuit breaker for the S&P 500. But we don't have that in crypto. Like ETH is down 40% on the month, and we do see days with extreme volatility. We see low liquid meme coins who can very well move up thousands of percent in a day, but also can move down 90% in a day. And all the info that you need for that is here. You see the volume, you see the open interest, you know how volatile these things are. It's like looking at a meme coin when you're in the trenches and be like, oh, okay, it's only 300K of liquidity in that. It's someone dumping 10K. It's going to dump the price very, very significant. If someone's dumping 100K, it's going to nuke that entire thing. And we've seen that happening and over again. So it's not too different from that. And I find it is a good attempt to give a bit more of or give a way better possibility to trade these things than Whales Market did. Now, the only thing I would say for the hedging side of things, if you really want to use this to hedge, then Whales Market is better because you can get your OTC deal there. Essentially, you need to deposit some collateral. And obviously that deal can also fall apart, but there's like, rules and regulations in place for how this is handled. But I find it weird to suggest circuit breakers and all of these things that we have in TradFi for a pre-market for a specific token on Hyperliquid that ultimately only gets 12 million volume or whatever in 24 hours when this volatility is what we are used to in crypto, and the main things don't have circuit breakers because this is a decentralized place to trade with all of the up and downsides that come with it.
Yeah, I mean, I take your point. I understand that, this is part of the deal, and I'm actually, I don't know if we need especially as you start talking about meme coins and other coins. Like, I don't think we need general circuit breakers across the market like that. I don't think that's the direction I would take this. But I do think this product is falling short in doing the job that it's supposed to do. Forget the fact that people want to speculate. The point of the pre-market, I would think, is to find the right price, to find the right price. And I'm actually querying whether it even does that. Even if you tell me this is the market price, I don't think it is, because I don't think the people who are who want to bet either way are doing so sufficiently, because they're too scared to participate. So I appreciate there are some people taking a bet either way, but that doesn't make it efficient, just because there are some people betting on one side and some people betting on the other, because there are a lot of other people saying, well, I can't participate in this market, it's too dangerous. Myself, for example, I decided I'm not participating in these markets because I don't want to get wiped out on some random thing. And therefore, if I'm not going to participate, that's one less person making it efficient. And so, yeah, sure. So there are some people participating, but that doesn't make it efficient, I don't think. And the more I think about it, and I think we need more data on this to get a sense on this, is what happened with XPL, for example. So this is an interesting question, right? We were talking about this a bit pre-show. Maybe a final question, an open question to as we close out the show. If XPL hadn't traded so high in pre-market and arguably been pushed so high by, I don't know, what, like 3 people on the pre-market? I can't remember. There was one wallet specifically, I think it was Techno Revenant, that just went crazy long all the time, pushing and pushing and pushing the price higher. And then people were too scared to short it, so it wasn't going to come back down. And so the price kind of settled. What does that mean? The price just settled higher than it would have been, which meant the starting point was there. And so who knows? Maybe if that hadn't happened, XPL starts lower, and yeah, sure, it can still pump way higher on the outset, but the starting point was different. So instead of going to 12, or it went way higher, it went to 15 bill, didn't it, at one point? But if the starting point was 4 and it pumps to 7, then that's a very material difference, the starting point being 7 and going to 15. So I just, that detail does matter. Like I know in both scenarios, there's still a gain after, and then maybe there's still a drawdown after, but that's a hell of a lot of money that's kind of being, whether it's manipulated or just not accounted for accurately, because of this strange dynamic at the beginning. So look, I'm not an expert in the dynamics of this, just like one of my thoughts as I think about that specific market. I don't think it's actually efficient price discovery at the moment. And that's something, the way that I've actioned that is by not participating. So Ledge, final thoughts from you. I don't know if we'll come to a conclusion on that at the moment. It's clearly something the market's trying to figure out at the moment, but final take from you before we close out.
I think it's the nature of a pre-market, even though the stocks pre-markets are way more volatile. And we had days even on the show where we said, oh, NASDAQ is up on the pre-market, is down the pre-market, and does the exact opposite thing once the real market, the actual trading is opening. And you will have always significantly less volume, which is willing to trade the pre-market than the actual thing. So there will be a price discrepancy. It will be easier to manipulate that. And even a project could come in and manipulate that and, set a nice starting point and come here and try to pump Monad and keep it around 20 bill. And at least another market participants would get the chance to bet against that and sell into that and make it just more expensive to keep this like quote unquote fake or manipulated price up. Whereas it's probably sometimes easier to crime a live chart. But I feel it's just in the nature of things that a pre-market, because not everyone wants to participate in that, will have less volume, will have more volatility, and will be just easier to expose that volatility on both sides. And of course, it's not perfect, but it's still way better than what we used to have before. So for that, I like it and appreciate it.
Yeah. Okay. Interesting stuff. As you say, previous pre-markets not doing the jobs. This is probably a one step better, but not perfect, as you say. So look, interesting conversation as always. Just a reminder, guys, we do this every single day, Monday to Friday, 7 a.m. Eastern time, live on X Video, YouTube, and you can catch us on Apple and Spotify podcasts as well. Thank you to my co-host Legendary. Thank you to Funky for his contributions as always, and thank you for joining us. We will be back same time, same place tomorrow. Have a wonderful day. Take care. We will see you the other side. Bye-bye.